So I'm sitting here with Mr. Ryan Rosplock with Guaranteed Rate Affinity, and he is going to tell you a little bit about his awesome company.
Yes, hi, good afternoon. My name is Ryan Rosplock with Guaranteed Rate Affinity. We are one of the largest national retail lenders in the United States. We have over 70, 80 different investors we work with, so we can pull from a lot of different options for you guys. Just gives a consumer or a buyer more choice.
Nice. Okay, so Ryan, I'm just going to jump right in with some of these topics. What would you say that you and your company do differently than other people, other lenders?
Yeah, I would say me personally, I look at things different than most loan officers. I have a financial planning background. I have a master's degree in finance. So when I'm working with buyers, it's not just, hey, what's the best interest rate you can get? It's looking at bigger picture. What are the different options that the buyer has? And then what are the pros and cons of each of those options? Because buying a house is a huge financial decision. It's not just one little bitty thing that happens. You have an overall financial picture. So you just have to understand your options and make good choices accordingly.
I love it. So what are some kudos that you hear over and over again from clients that work with you, Brian?
We do surveys after every single closing. And the most common response I get is that was so easy, right? We really try to make the process simple. We can make it easy or difficult, but I've been doing this long enough to where I know what's needed, and I will only ask for what's required so that you're not chasing down a bunch of paperwork that's not required and unnecessary. And I want you to walk away from the process thinking like, wow, that was so much easier than I ever thought it would be.
That is so true. And I have a personal experience with Ryan. My daughter and I bought a house last year together, and we took advantage of her first-time home buyer thing, which I'll ask him about momentarily. And it was so easy. We were shocked, and it was, I'm not going to use the word fun, but it was an easy experience. So we thank you for that, Ryan.
Thank you, Gina.
Who would you say would benefit most by working with you, Ryan?
I would say buyers that really need some education and understanding of the process.
Okay.
Because I know how easy it is because I do this for a living. But most buyers, especially first-time home buyers, they don't know what questions to ask, where to start, and a lot of them just kind of freeze, the old paralysis by analysis. So they just don't know where to start. So I think the buyers who really need some guidance, I work very well with them because I know that buyers need the assistance, and they just won't get that with a lot of lenders out there.
That's very cool. So what I'm hearing you say is you basically handhold them through the process.
I absolutely do, yes.
I can vouch for that too. So what would you say is the main reason that people don't just jump in, and what holds them back, I guess, is the better way to ask that question?
I think the biggest reason is just the unknown of not knowing where to start, who to talk to, what direction to go, and also the stories they may have heard about how difficult getting a mortgage can be and all the paperwork that's involved in the process. So I think that's the biggest hesitation is the unknown.
Okay, so what if people have really poor credit? Because I hear this a lot, and I'm sure you do as well.
Yeah, it's all relative, right? So the credit scores are a very important part of the loan approval process, of course, but not only that, but that will affect the interest rate that a buyer can get, not only on a mortgage, but car insurance, home insurance. A lot of people don't understand that. So having good credit is good for many different reasons. But let's say you do have credit challenges. Part of my job is to look at your credit, figure out what's going on, and what's the path to getting you from point A to point B. Maybe it's just some old late payments or some collections, or maybe you just have a few credit cards that are charged over limit. That could be a short-term fix. So it's really dependent on the exact situation. And if there's some help needed, I have credit team who can help you.
Very nice. So what do you consider poor credit?
So average credit would be, let's say, between 620 and 680.
Okay.
Anything below 620 starts to become what they consider poor credit. And if you get below like 580 or 550, that's pretty bad credit, if you will. But again, it's all relative to what's on the credit report and driving those scores.
Okay. So quick question, because I hear this a lot too, segueing off of credit questions. What kind of down payment assistance programs do you guys have?
There's a lot in the state of Texas. There's programs where buyers can get a 5% grant for down payment assistance. It's relative to credit, income, first-time home buyer or not, but there are a lot of options when it comes to money needed for down payment. So if you have decent credit and a good job, but all you are missing is the money for down payment, there might be a solution there.
Very cool. Okay, so walk us a little bit through the appraisal process. I know that I, as a real estate agent, work heavily with you as the lender once we've got a house under contract, but help our buyer peeps to understand what that appraisal process looks like in general.
Sure. So as the agent will do, you will look at comparables to see what kind of value the house should be coming in at, if you will. And what the appraiser will do is the same thing. They will pull data from the neighborhood, looking at houses that are most comparable to a house that a buyer is purchasing. Similar square footage, same neighborhood, pool or no pool. They want to give the best market value so that it's a third party analysis of what that market value is, which kind of supports what you, the real estate agent, kind of come up with. And it just really protects the buyer to make sure they're not overpaying, and also protects the bank.
Right. And for those of you who may or may not know, the lender is the one typically who orders the appraisal. I do get that question occasionally too, so just an added extra education there for y'all. So this next question may seem like a no-brainer for some of us, but for those who literally purchase a house once or maybe twice in their lifetime, I think this is huge. What are some things not to do when someone has a house under contract to purchase?
Here are some of the basics, and the reason I'm saying these is because they've happened over the years of my career. Please don't quit your job. Please don't change jobs. That's not a deal killer, but that can create added issues, if you will.
Delays, probably.
Delays, correct. Don't go open new credit. You got that new house you're going to buy, but so don't go to Home Depot or Lowe's and open up that brand new credit card and get your appliances for 0% for 12 months. You can use credit that you already have established. That's not a big deal. It's opening any new credit can create issues.
Okay. What about like buying a car? I guess that would be buying,
Same
don't
thing.
do that. That's
Yeah.
the one I hear about mostly. Okay,
Yeah.
cool. Okay, so regarding pre-approvals, tell us what is the difference between pre-approval and pre-qualification, first of all, and what does a buyer need to read up on, if anything, before they come to you, the lender, to get their pre-approval and determine what their buying power is?
Sure. A pre-qualification is really just a lender getting some information from a potential buyer, maybe doing an application, pulling credit, but not looking at any paperwork, right? So a pre-approval letter is the same process. It's an application, it's a credit report, but also getting the customer documents. Standard documents are pay stubs, W-2s, bank statements. If you're self-employed, we'll need tax returns. But once the lender has reviewed your documents, then they can provide an actual pre-approval letter confirming that they have reviewed the paperwork.
Okay, cool. And that, for those of you who may or may not know, is what I, as the agent, need to include with any offers. That is required.
Sure. So one other thing that we do from a pre-approval standpoint, and this is what I recommend, is we can get a buyer's loan fully approved up front, meaning we take the bank statements, the pay stubs, the W-2s, and we actually have our underwriting team fully approve that file from a buyer standpoint. So that all we really need once a buyer finds a house is an appraisal, insurance, and the title commitment.
Wow.
Really elevates an offer if you're a buyer, especially if you're competing against other offers that don't have that full approval up front.
So just so that I understand from an agent's standpoint, when I attach to the offer a third-party financing document, and we put usually 14 to 21 days to get that approved, you're already approved up front.
We're already approved, so instead of marking the days, there's a section that you check that says no buyer approval.
I don't know that I've ever checked that box. That's hilarious. Okay, thank you. Awesome. So talk about, Ryan, a soft credit pull and when that's used, and a hard credit pull and when that's used.
That's a great question. I get that all the time, and that is one of the hesitations from a lot of buyers is I don't want my credit pull, or I don't want my credit pulled from a lot of different banks. When we do an application initially, all we do is a soft credit pull. So we don't ding your credit. It gives us the data we need. It gives us your scores, all the debts that we need to analyze for the pre-approval. And then we won't do a hard credit pull unless we're ready. Let's say you find a house, you're under contract. At that point, we need to do the hard credit pull. But initially, it's a soft pull.
Very cool. When's a good time to buy, Ryan?
The best time, in my opinion, is always at some point in the past, whether it's yesterday, a year before, 2 years, 5 years, 10 years. If you just look at real estate prices over time, they don't wait for people. They're not, real estate prices are not going to wait for you to buy the house. The longer you wait, the more you're going to pay. One of the common phrases that I like to use is it's time in the market, not timing in the market. It's a big difference.
That's good. What about self-employed buyers? Tell us what you need from buyers that, like me.
That have your own business, yes. So the biggest challenge for most self-employed buyers is the tax return. That's what lenders will typically need, and we will look at either 1 or 2 years of tax returns depending on the application. But what a lender's looking for is the net income on the tax return after all expenses and write-offs. So what a self-employed buyer typically does, which is smart, which they should do, is write off as much as possible. To
catch 22.
It's a huge catch 22 because that's great for IRS purposes. You don't have to write a huge check to Uncle Sam, which nobody wants to do. But then when you call me and you send me your tax returns, we have a problem.
No income.
Could have a big problem. But that's where our alternative loans, we have what we call GRA portfolio products, where we have limited document type loans. For example, if you're a real estate agent, we could only look at your 1099 and not even look at your tax return. Or if you're a business owner and you have a lot of money coming through your bank statements, we can look at 12 or 24 months of bank statements and calculate income that way. So there's a lot of different options, and I'd be surprised. I think you'd be surprised to know what the options are and how much better they could work for you, even if you have to do a limited document.
Sounds like there's always a workaround, basically.
Almost always, yes.
What about investors, Ryan? Do you guys work with investors?
We do. We have what's called a DSCR loan, which stands for Debt Service Coverage Ratio. And the key there is the mortgage payment that we're going to look at and calculate based on the interest rate and the taxes and the insurance. What we're looking at is the market rent of that property. Does it equal or exceed the mortgage payment? If so, that's really the income variable in getting that loan approved. Of course, you need decent credit, you need down payment. But as long as the market rent exceeds the mortgage payment, it's a pretty easy loan to get approved.
Cool. Okay. So we've covered a lot of basic stuff here that most people, I think, will be educated and get value from. Any last minute thoughts?
Yeah, I think working with a good team is one of the key steps in a successful home purchase, if you will. You need to have a real estate agent who is knowledgeable, knows their job, communicates well, and same thing with the loan officer and the lender, because we all of us have to work together to make the process go as planned, and again, keep it easy. Yeah,
that's the goal. And I will tell you from an agent standpoint that lenders are my best friends during the other agents and the lender. So hopefully this has been educational for you guys, and we'll talk again soon.
Thank you.